David Kaufman back with us to talk about some alternative investments. David, of course, is president of Westcourt Capital, and we're talking private equity today. We talk about sort of everything in the alternative space. Where does private equity fit into a regular person's portfolio?
Well, it's interesting because it can either fit, depending how you look at asset allocation, it can either fit under the asset class of alternative investments, but as private equity, I think that it properly also fits in the category of equities. So maybe 25% of an equity portfolio should perhaps be in private equities. Exactly.
So tell us about cash flows. How do we invest in this asset allocation and actually get some cash flow going here back to the investors?
Well, there are different types of private equity investments, of course, and a lot of them are very long term. And typically when you hear about the private equity, say limited partnerships,
sure,
5 to 7 year tie-ups, they are not about yield, they're all about growth. And so in fact, that's the whole point. Keep my dividends, reinvest them, do what you do best, and pay me a whole bunch of money back with a high IRR over the long term.
But that's on the risky scale.
That's on the risky scale. And then on the other side, you have, we've spoken about REITs, for example, in the past, real estate investment trusts, which actually are private equity in the sense that you're buying a private asset that throws off cash flow and passing that through to investors. And there are other examples of private equity projects like that, which focus, instead of growth assets, on yielding assets.
Now, the knock on private equity, as far as I'm concerned, is that it really comes in two forms. There's the true private equity of the KKRs of the world that none of us can afford, and where the rich get richer, and start with $1 million, it's easy to make another. Then there's the private equity that's accessible to most of us, where you're actually throwing the table scraps and you don't do very well. Can you actually do well as a small investor, a retail investor in this space?
Well, the only way that a retail investor is so small that, for example, they're not accredited, they're not a high net worth individual, typically, unless they invest in a fund's company or in their own company, which is, of course, private equity, they're going to probably end up buying shares in a publicly traded private equity company, for example,
right?
Like Onyx. And in my opinion, there's nothing wrong with a company like Onyx. They've done fabulously, except that they tend to be very heavily correlated to the public markets, which puts you right back in the public equity space.
Was there a vacuum created when CIT went under? Wasn't there this kind of mid-market, small company, medium company that dying for investment? The banks didn't want to touch the too small, but there's some great returns, 15, 20% kind of returns, great cash flow.
Right.
Who's picking that up? There's some great funds out there that we can invest money into and get a quarterly return, right?
That's right. Well, there are a lot of sort of what I would call a mid-sized private equity firm, and mid-size can either refer to the size of the private equity firm or the size of the companies that they buy. And one of the benefits is that they tend to trade on inefficiencies in the market, which is part of the inefficiency is that the companies that they buy, either a piece or all of, are too small for the big boys to look at, sort of like CPP or teachers,
right,
and much too large for the average investor.
And the payments coming out are dividends, right? So they're taxed better?
That's right.
So
that's right.
That's great.
So is there anybody for whom private equity is not appropriate, that you would say this is not a class for you?
For someone that owns their own business, it may never have occurred to them that they are probably grossly overweighted in private equity already.
Right.
And so they should really concentrate on
GICs.
on other people's equities. That's right.
Right.
And of course, for people that have low net worth, it's something that it's either a relatively risky play or a relatively illiquid play, which some people say equates to risk anyway, and they should probably stick to a lot of the good mutual funds that are out there.
Great.
David, great to have you here.
Always a pleasure.
Thank you.
David Kaufman, president of Westcourt Capital. It's time.